Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time. This week's topic, guys, is where is the ATR happening? You're like, oh, Jared, we already talked about average trading range. This is different. I'm telling you flat. I have done hundreds of lectures, 300, 400, 500 lectures in my career. I have never done a lecture on this topic before, not ever. All right, so stick around for it because it's a good one. I'm telling you straight, it changed my trading career. No, that's not clickbait. It's not. There are a few holy grail moments that we all have in our trading career. For me, this topic was one of them. Where the ATR is happening. Okay, so please stick around for it because I think you're going to learn a lot. It's a simplistic concept. It's a basic concept, but it took me years to figure it out, and it changed my trading forever. And I've never done a lecture on it. If you like these videos, please click the like button, hammer the subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is, where is the ATR happening? ATR is average trading range, not average true range. Average true range is from yesterday's close to today, including the gap. Average trading range is 9:30 to 4 o'clock. Now, some of you might think ATR, oh, I know all about that. You've done this. I have never done a lecture on this topic before. Never. You've heard lectures on average trading range. In fact, we did one on 3-bar plays the other day. This is different. Okay, yes, we will be talking about average trading range. We will be referring to it, but not in the way you're used to. Okay, before we get into that, though, there are a few slides I want to go through to kind of set you up for this particular lecture. 2 or 3 of these you may have seen before. But this, it's not an exaggeration in any way, shape, or form. This concept changed my trading. I know people say that stuff all the time, right? And they do these fake BS headlines or those clickbait titles and all that other stuff. The one thing that sparked my millions of dollars in trading, right? Everyone does that crap. This is a serious topic today. It's a very simple topic, and you're going to be like, maybe you knew it, maybe you didn't. But for me, it was an aha moment, one of the biggest aha moments in my trading career. And I'm not saying that to keep you watching. You could log off now, and I don't give a shit. All right, I'm simply telling you this because it has changed my trading career, and I think about it on every single trade that I take. There's not a trade I take that this doesn't get referenced, okay, at least in my trading. I may not say it to you guys in the chat room, but it gets referenced for me as part of my checklist, okay? So with that, let's dig in and talk about where is the ATR happening. Before we do that, though, we need to review something, okay? The market is random most of the time. You guys heard me say this, I don't know, a couple months ago. We don't always know what the market or the stock should be doing. We aren't supposed to know everything all of the time. It's not our goal as traders. And this needs to be reminded to you, okay? Most price action is random. Your goal is to find the price action that's not random, right? Ignore random price action. I went through this a month or 2 ago or whenever it was, which is why I'm not spending a long time on it. There are thousands and thousands and thousands of stocks that are out there. Guys, as you know, and yes, it was a light, low frequency month. I've taken 20 trades this month, right? Well, how many thousands of stocks are out there? And of those 20, I bet you 5 of them I took 2 or 3 times. So maybe I took 10 different symbols this month out of 3,000 or 4,000 in the stock market. Because of those thousands of trades, I could only find those 10 symbols that, to me, weren't random. The other ones were too random for me to push the button and put my hard-earned money into. All right? So I want you to realize that you're dwindling down. This is why we scan for certain criteria. Volume criteria, oh, at least 1 million shares a day. Maybe range criteria, oh, at least $2 in range a day. S&P 500, NASDAQ, etc. You're already dwindling those 3,000 or 4,000 stocks down to maybe 500. And then those 500, what do you do every morning? You look at the gap list and you're like, okay, of those 500, there might be 30 that have a gap that's interesting to me. And of those 30, maybe only 10 get on the list. And of those 10, maybe only 4 make the favorites list, and of those 4, maybe 2 get traded. See how we went from 3,000 or 4,000 to 2? That's your job. Ignore the random stuff you don't understand and just focus on the stuff you do understand. That's it. This will make your trading much, much, much easier. Trying to explain something that can't be explained, it's a waste of time. Okay? It's a waste of time to explain facts even to people sometimes because they just don't believe them, right? Trying to make something out of nothing, it's a waste of time. All right? Wait for what you do understand. Feeling compelled to know or explain everything all the time, this is one of the single biggest problems that all traders experience at some point in their trading career. The need to be right all the time. The need to explain everything all of the time. Not everything can be explained, right? Not everything can be explained. And that leads to a level of gambling, okay? It's not your job to explain everything. Find specific instances where we can explain what is happening. Find specific instances where the odds are obvious. Not random stuff like jumping in Apple today. That's not so obvious, is it? You don't need to be right all the time. It's okay to admit you don't know. We don't know most of the time. Oh my, what? He just said what? We don't know most of the time. Most stocks, most of the time, we have no idea what they're going to do. I'm only interested in the ones I can explain most of the time, which are very few. That's it. Leave your ego in the closet. No place for it. Okay? That'll just cost you more money. So those are basic foundational things that you need to know as a trader. Okay? Also, and this is going to get into ATR very soon after this. Okay? Stop managing your way out of trades. You guys remember this from, I don't know, maybe this is 2 weeks ago? Okay? Stop managing your way out of trades. You don't have to raise your hand. How many of you go back and look at the trades you took over the past month or 2 or 3, and you just go, if I only held it to target, I would have, I should have, I could have made 15R, but I made 3R instead. Some people say, oh my gosh, I would have quit my job months ago if I let my trades hit target, or if I took my stops. Stop managing your way out of trades. Just stop doing it. You're costing yourself a lot of money. A lot of people, not everyone, a lot of folks are taking perfectly good trades and turning them into perfectly crappy trades. Like you're taking the best idea you've ever seen and turning it into your worst nightmare because you're managing your way out of trades, right? Knowing you left money on the table, perhaps losing on a trade you should have profited from, knowing your trades produce good results, but being unable to see them through, it's going to lead to the eventual failure of your business. That's it. That's it. Plain and simple. I don't know any other way to cut to the chase today. All right? You're either going to draw down your accounts at critical levels, and you'll have to quit. You'll quit out of frustration and join the legions of failed traders with all the excuses, hopping from chat room to chat room to chat room before they finally just pack it up and go, oh, it's just a gambler's business for lucky people. And the people that do make money, well, they're just lucky. Okay, whatever. Do what you need to do. Or maybe, just maybe, you'll hit the wall and begin the challenging process of change. And you know what that change leads to? A fruitful life, a life of freedom and flexibility. Guys, this doesn't have to be millions of dollars a year. It could just mean more freedom and time with your family, your kids, your loved ones, your friends, vacations. It doesn't have to be $500,000. It could be an extra 50 grand a year. It could be an extra 20 grand a year that you didn't have before that you can do in an hour a day. And that 20 grand is a retirement fund for you. It's a vacation a year to you. It's something to you. But you're going to have to make some tough decisions and make some change if you want those things to happen. I see it all the time, guys. People dick around, hack around with this stuff, and they think just because they've been doing it for 1 or 2 or 3 years that they, quote, should be good at it. No, it takes an effort to be good at anything. Just because I go to the local gym and show up at the basketball court and just hit, hack around, doesn't mean I'm going to be a great basketball player unless I'm deliberate in my approach. You have to be deliberate in what you do to be good at anything. Just showing up isn't enough. It's good. It's not enough, though. Especially in this business, one of the most challenging things you can try. Okay? And I've said this before, and you've seen this slide before, so I'm going to go over it quickly. There's a gazillion ways to make money in terms of managing in this business. Okay? There's a million different ways to make money. You can shoot for half-hour targets. You can shoot for 5-hour targets. You can do pivot management. You can do bar-by-bar management. You can do moving average management. You can do a hybrid of any one of those things that I just said. What's the reason I'm saying that? So that you'll stop making excuses, because I know I know there's a management out there for you. For your personality, your time constraints, your intangibles, what you're good at, what you're not. I know there's a management strategy out there that fits that and is profitable. So I don't want to hear that it can't be done. It's just, it's that, Thomas Edison thing. I have not failed 10,000. I haven't failed, right? I've only found 10,000 ways that didn't work. So for you, 2R might not work so well. 4R might not work well. Pivots may be better. Who knows? But don't tell me it can't be done. Because it can be done. And you have to find out where it is for you that works best. Now, let's get into this stuff, okay? Not exaggerating at all. This changed my trading career. And you're going to be over and underwhelmed at the same time. You're going to hear this and you'll be like, that's it? Yes, that's it. It's this simple. So no excuses to say you don't understand it, okay? Make your trading easier by thinking about ATR in a different way, okay? We all know what ATR is. It's the average trading range of a stock. It's pretty easy to figure out. You can either get an indicator that tells you what ATR is, or you can pan over the different, the different daily charts, right? And just find out, oh, it's about $2. Oh, it's about $3. That's easy stuff. If you want to make it really easy, like I said, just go get an indicator and it'll tell you, oh, the 14-day average trading range is $2.74. Great. That's the easy part. But there's more to it than that, right? We've already had lectures on, oh, well, that stock's at 90% of ATR, so I'm not going to take the 3-bar play. Oh, that stock's at 130% of ATR, so I shouldn't take that play. We've already had lectures on that topic. This is different, okay? That's important. Don't get me wrong. Do you really want to take a trade that's exceeded its trading range by 50%? Probably not. Right? I know there are days stocks do 200, 300, 400% of range. We all know that. UPS yesterday, it did probably 500% of average range yesterday. Okay? But if it's at 200%, I don't really want to take a new trade on that. That's a different topic. Today's topic is on this. Okay? Let's talk about Apple today. All right? Today. So, if you were to look at Apple today and you wanted to try to find an entry in this, I don't know why that's there, that should be deleted, but whatever, it's not a big deal. Okay, the Qs were going straight down today, like straight down. This little dotted line is the open, right? And when this little 1 minute chart is till about 10 a.m. Okay, you can see Apple left a bottoming tail off the open, right? Chopped around, bottoming tail, and there was possibly a difficult entry here, but I'm not worried about the entry because it's the concept I want you to go after. Again, I want to repeat myself. Don't focus on the entry on Apple or the stop loss on Apple in terms of a quality pattern. I want you to focus on what Apple was doing versus what the market was doing. Well, they're like, well, geez, Jared, now you're talking about relative strength, not ATR. Oh, no, I'm talking about both, but we're going to get into how to think about ATR, okay? Apple usually does about $2 to $3 in range or ATR, okay? Showing this type of relative strength. This thing was super strong. No denying it. The daily chart had a little double bottom retest. Pretty sloppy daily. Not the best daily, let's be honest, okay? But when you go across this daily chart, Apple's doing about $2 to $3 a day. Of course we see outliers. This big red bar, this big green bar, this big green bar over here. But if you look at most days, right? And again, ATR can be changed. You might have a 50-day ATR, a 7-day ATR, whatever. I just want the general idea. And Apple's about $2 to $3, okay? But this is what changed my trading. And you're like, Jared, that's so stupid. This is so simple. Duh. That's it? Yes, this is it. What direction do you think that ATR is likely going to be in? That's it. That's what we're going to talk about for the next 20 minutes. What direction do you think that ATR will likely be in? This stock is showing extreme strength, like the kind of strength that nothing's going to stop this thing. The market's already getting crushed. Not a small, light, controlled pullback. It is a controlled pullback, but it's a big one. Just tanking. 1, 2, 3, 4, 5, 6, 7 bars down. Apple's just leaving bottoming tails. Now, if I know that Apple has $2 to $3 in range, and I know that this is potentially a 65-cent stop loss. Well, we know that the high and low of the day are 65 cents or 70 cents. Let's call it 70. Well, there's a dollar, let's just make it $3 for hypotheticals. We know that there's $2.30 left in Apple today. You know it because it's probably going to do an average range, hence average, most of the time. Most of the time. Of course, guys, nothing works 100% of the time. This isn't going to work every time. But most days Apple's doing $3, and today it's done 70 cents. So there's $2.30 left. Where is that ATR most likely going to happen? Is it going to happen under the 170 mark with support down here in a double bottom retest? Or is it likely going to happen up in here, above, showing crazy relative strength? So, the next step to this thought process is this. If you really don't want to get stopped out on something, give it a lot of room. So you're like, well, 70 cents means 65 cents. I need $1.30. $1.30 plus 70 is 2. I'm on the low end of ATR, right? $2 to $3. It almost never does less than $2. Almost never. So I know it's going to do $2 today. There's a 99% chance Apple's. I don't know of a day over here in the last 3 to 6 months it's done less than $2. So if I know it's going to do at least 2, and it's showing this kind of relative strength, it's probably going to put in that extra $1.30 on the high side, on the low, right on the long side. It's probably not doing it below. And if it does it below, it's going to come right into support on the daily chart right over here, right? It's going to come right into support on that, which means what? One more reason, it's probably not going to stop out, especially if you give it a little bit more room. 1, it's going to eat up its ATR, and 2, it's going to run into support, and 3, it's got crazy relative strength. And what did Apple do? Apple did this. It ripped. And what did it do? It's ATR. I don't know where Apple at is right now, but let me see. Apple, okay. It's 172.62 right at this very moment. Okay? 172.62. It looks like it peaked at like 172.70 or 80. Well, 170 to 172.80. What's that? $2.80. What's Apple's ATR? About $3. That ATR happened. There it is. $2.89, Jeff. It happened on the long side. Why? Because that was the most likely scenario. See, look, you can flip a coin every day, right? You can flip a coin every day and go stocks higher, stocks lower, stocks higher, stocks lower. But we're not doing that. We are taking bottoming tails and support and relative strength and volume spikes and moving averages. What are we doing? We're taking that 50-50 and now we're making it 51-49, 52-48, 53-47, 54-46, 55-45, right? I know a lot of you guys think your edge is like 90%. It is not. Your edge is small. It's probably 3 to 5%. Seriously, it's probably that. And you think, geez, Jared, that's crazy. Why would anyone want to be a trader? Well, I don't know. Ask a casino why they want to be in that business with a 0.5% edge. Why? Because it works over not one, but thousands and tens of thousands of hands. So we throw in all those things, and in this case, bottoming tails, support. Sorry, I got to get rid of this thing again. Bottoming tails, support, relative strength, and you're like, well, gosh. This isn't a coin flip anymore. The odds are suggesting it should go higher. And there's still $2 in ATR left. That ATR is going to happen, guys. Listen to me. This is the aha moment. That $2 to $3 in ATR is going to happen. Whether you like it or not, it's going to happen. The only question is it going to happen on the long side or the short side? That's it. That's it. And Apple's suggesting it's going to happen on the long side because of the bottoming tails, the extreme relative strength, the daily support. That is it. For me, this was an aha moment, like a, holy shit, I can't believe I didn't think of that sooner. Okay, we're not done. This is just on the first slide. I think about it on every single trade I take. If ATR is to go, in what direction is it to go? And if I'm wrong, can I handle the ATR going against me? That's an important factor. Why do you say this? Because on buy setups, you can factor that in. You can factor the ATR in and go, wow, well, even if it does continue, like when you bid for a trade on a pullback, you're bidding for it, right? Before the actual buy side, you can factor in like, well, gosh, if I bid for it here, it's only subjecting me to 50% of the actual ATR. Think about what I'm saying, process it. I'll try to give you an example in a minute. If a stock goes from 180 to 190, and that's full ATR, or most of it, 80% of it, and it pulls back to 185, and you give it a low of the day stop, that's $5. I know it's big. What are the odds it's going to take that $5 and go much more? The odds are like 5 or 10%. Because it's already met its average trading range, and that range was on the high side. That means the stock was strong. So the likelihood of that stock going significantly against you is slim. It happens. It's just slim. I think about it on every trade I take. Okay? Here's a trade on UPS today. We took this trade. You guys remember this trade. Now, obviously, yesterday on UPS was a monster day. 5, 10 times ATR. I don't know exactly what it was, but at least 5 times ATR. Okay? Then, yes, there's always going to be wide range bars on a chart. We know this. Here's a wide range bar. Here's a wide range bar. Here's one with a topping tail. Here's one. Here's one. But generally speaking, UPS is like a $3 trader, something like that, about $3 a day. Well, similar to Apple, what was UPS doing today? The SPY was getting hammered. Hammered. Okay? 945, the SPY is near the high of the day. 945, 950, UPS is near the high of the day. The SPY is rolling the F over, getting hammered. This thing's near the high of the day. Yes, I had a little hiccup at 145.50. We knew it. I got in a little bit under it. Okay? Now, that's a wide stop because the low of the day is 144. I gave it 25 more cents. I am looking at UPS and I am thinking to myself, okay, this thing does $3 a day. And it's already done $1.25 by the time we get in. Because remember, we took half at 145 here and half at the high of the day. Okay? Right? So I want you to think about that. It's on $1.25. So maybe it's got $1.75 left in it. So if this thing pops and goes 50 cents or $1 higher, guess what? Maybe it's got $1 after that. But now it's got to come all the way back against me and then go another $1 through support through yesterday's monster bar. And we all know that the day after a super duper crazy wide range bar is usually not a wide range bar. The day after one of these is usually an average or below average range day. So I'm starting to feel more and more comfortable now about taking a extreme relative strength stock. It's ignoring the market, going long on it because it already put in that move. And there's also, if I could draw one of these over here, let's pull this over and do this. Also a pivot right there, right? Now, granted, that is below us, right? Over here, that is a little bit below us. But you're looking at it and you're going, what are the odds this is going to blow through the low of the day after yesterday's crazy move and this extreme relative strength? Now note, I really want you to pay attention to this. I'm not just taking ATR in a vacuum. I'm combining it with other concepts. Right? I'm combining it with crazy relative strength, a decent pattern with bottoming tails, the fact that it just shit the bed yesterday right into support. The odds it breaks yesterday's low are very small today. Very small, especially showing this kind of strength. Then I factor in my ATR range and where that ATR is likely going to be, higher or lower ATR, it's higher ATR. It's for me, to you guys, you might be laughing in the back. This is profound to me. Profound. I wish I had sorted this out in the first couple years of my trading. It's profound. Okay? Does the inside day concern me? The answer, Johnny, normally, yes. This kind of relative strength, no. Yes, normally you're correct. I would be deeply concerned. But when I see this kind of strength against the market, it's hard to ignore. It's like Halle Berry just took her top off in front of you. You're like, I can't turn the other way. I'm sorry. I'm going to keep looking. That's it. And so you're correct with regard to narrow range inside days. They can be tough, but not with this kind of strength. Okay? Now, there's the UPS, and that's what it did. Moved up. Now, answer me this. Answer me this. Guys, I'm piling on the concepts here. You can choose to use these or not choose to use these. Okay? Answer me this. The higher UPS goes, the more ATR it puts in your direction, the odds of it stopping you out go lower and lower and lower and lower. Wide range bar, now the ATRs say $2, right? And this should be a bit lower because it's down here, right? Now the ATR is like $2. Now, what are the odds? What are the odds now? It's going to go $2 against you and then another dollar after that. Slim to none. As it goes higher, now the ATR is being met. You're like, well, shit. Now, but, hold on, we're going to add something else to this. Now that the ATR is getting more and more in your favor and not against you, what does it also give me more confidence to do? Add to the trade. Add to the trade. We didn't add to this, but there's a buy setup that was addable. Because again, the ATR is now getting more and more. Now, does there become a point where the ATR gets so extended that it's not in your favor and going against you is more likely? Yes, of course. But we're not talking about that. We're not even at 100% of ATR yet. When you get to 120, 150, 200% of ATR, then we have those concerns like Amazon yesterday. You guys shorted it and did really well because it was way past its ATR. We're not talking about that. We're talking about a stock that's in your favor in the ATR, and it hasn't exceeded its ATR. Now it gives me more confidence to add to the trade because the idea that it's going to go against me gets lower and lower and lower. The higher the stock goes, the more strength it shows, the closer to target it goes, the better it feels, and the more likely it works. So what direction do you think the ATR will be? Higher. Okay? As if the stock in the last couple of weeks in the consolidation experiment, yes, that's a good point too. Okay? Guys, it's a very, very insanely simple concept. And it took me years to figure this out. I don't know why. Maybe I'm not the sharpest tool in the shed. I don't know. But it took me a long time to sort where the ATR is happening out. ATR is one thing. Where is it? 50%, 100, 200%. But where is it in the next likely ATR to happen? And how much of it is left? That also isn't just for your targets. It's how much could go against me. If there's only 20% of ATR left, and you put your stop at the low of the day, the odds it's going to retrace to 80% and that 20% is going to be under the low of the day are slim. Does that make sense what I'm saying? The concept that extra 20% will go in your favor is much higher than the concept that the 80% will go against you. All right? So again, a very simple concept, but one that matters, right? Here's CVNA. This is a gap up. You see this bottoming tail shake. Why am I showing this? Because the ATR on this, again, is on the high side because of the bottoming tail. It already tested that area. The odds that you take this at $89, sorry, is that $86, whatever that was, okay? $86.75, right? The odds it's going to be down here, the remainder of the ATR are slim to none. Because the momentum is higher and the bottoming tail proved that to me. So note, I'm not blindly just taking ATR. We're using other concepts to confirm the direction of ATR. Note, everything you've seen has either had crazy relative strength or some form of bottoming tail or some form of retest. And we can use that in conjunction with the daily chart. Now, we'll move on to one more. Take a look at this 3-bar play. You've seen this slide a couple times. It failed here and it failed here. But once you start looking at this, now you can see the double, triple bottom at 266, right? Right in there. Okay. When you get back to the high at 270, you have a stock that's moved $4. Okay. And let's say the ATR is 7. Let's just say hypothetically it's 7. I don't know what it is on this stock. But now you get back to 270. You have $4 to the low of the day. What are the odds after all of this support, all of this battling and fighting, right? Every time it pulls back, buyer step up. Pulls back, buyer step. Pulls back, buyer step. Pulls back, buyer step. Pulls back, buyer step up. What are the odds if you get in at 270 that $3 extra in ATR is going to be down here? Think about what I just said. If this has a $7 ATR, and it's already done 4 and it's tested this, what are the odds that the next $3 are going to be down here versus up here? Extremely unlikely. Extremely unlikely. So then you got to start changing your thought process and going, okay, I understand that this wasn't the cleanest setup ever over here. I get that. But I also must understand, because of the battle that was fought and the winning by the buyers, right? The buyers won the battle, that the ATR, the $3 left, there's an 80 or 90% chance that $3 is going to be on the high side, not the low side. I need to find an entry here. I need to find an entry here. Okay? Well, that's right. If you and I are both in it, Jordan, yes, I agree. But you get the point. So you're going to take this entry here. Now, you may have to give it a couple bucks, some wiggle room. But that ATR is likely, the $3 we're talking about is likely going to be on the upside, not the downside. The odds this thing comes all the way to the low of day and then adds $3 more to the low of day after a battle like this, slim to none. Feel good about taking this up here. Feel really good about taking that breakout. The ATR is in your favor. The direction of the ATR is in your favor. Now, having said all of that, sometimes, I don't know why this is opposite. Let's try that again, Jared. There we go. All right, there we go. All right, okay. Now, ATR matters, but in what direction? Well, Tesla showed extreme strength to the market yesterday. Yes, the market went higher, okay. And Tesla went higher. Add the ERs in the end, okay? A lot higher. So I consider this great strength because the market started off the day sideways, right? For the first 20, 30 minutes of the day, 10, 20, 30 minutes, it went sideways. Tesla just ripped for the first 20 minutes of the day, okay? But my point I'm making is sometimes the market just drags everything down, right? Tesla looks like it had met its ATR. It gapped up and then moved about, I don't know, $6, something like that. No, more than that. Sorry, my bad. Like $9, okay? Something like that. Well, Tesla met its ATR and the market tanks. Well, what do you think is going to happen in that scenario? If Tesla's already at ATR and the market's tanking, well, the odds of this going higher are slim. Now, if Tesla wasn't at ATR, then the odds of Tesla bouncing here are better. But it was already at ATR, maybe even exceeding ATR. I don't know what the ATR of Tesla is, but I bet you $9 is pretty high over the last 3-4 weeks. That's probably on the high side. So it probably exceeded ATR. And then the market tanks, okay? Granted, Tesla started to pull back before the market tanked. Well, actually, that's not true. The market tanked right here at about 10 o'clock, and Tesla still held. It gave in because it was already tired, and the market didn't help. This is not a scenario where ATR failed. I want to be clear. It's not an area where ATR failed. It exceeded its ATR. And then the market just shit the bed. And Tesla sold off. So this is a different scenario. But this is meant to say not everything works either. Now, in this case, Tesla did work. You guys got your 2R target with Cliff, right? So I really need you guys to think about this concept. This slide is the one I really want you to think about it on, all right? When you see a stock doing this, setting a line in the sand at, say, 266, and then works its way back to the high of the day. Now, I'm not factoring in market conditions here because I don't have them on this. But when you see all this happening, and then you see a consolidation, which this thing gave at 10:30 with a little peekaboo bottoming tail, it's a no-brainer. It becomes more of a no-brainer when you realize this stock is most likely going to put in an average day's move. I want to repeat that because this is the part you need to hear. Average trading range is called average trading range because it's the average trading range of the stock. Are there exceptions and the stock will do 25% less range sometimes? Yes. Are there exceptions and the stock will do 50% more range sometimes? Yes. But average means average. And if it normally does $3, it normally does $3. If this stock normally does 7, it normally does 7. And that's all I can base it off of. Now, if it's a level 1 gap, it's probably going to do more than that. I get that. If the market conditions are crazy good or crazy bad, it may do more or less. I get that. I am talking about in a normal circumstance on an average day where the market doesn't average move, the stock doesn't average move, because that's what happens most of the time. So in that realm, this stock at the high of the day is a wonderful entry. Okay? It's a wonderful entry. Now again, exceptions exist, like Ollie's saying, UPS yesterday, level 1 gaps, extreme market, maybe news comes out in the market and the market goes crazy. All that's, yes, that factors in. But we're talking about, that's the 20 or 30%. I want the 75% of the time. What happens most of the time? And that's this. Okay? So we need to factor those things in. And if a stock does what this stock did, the ATR is going to be on the high side. Almost every time. You see that pattern there and you realize it held 266 like a rock star, don't give it the tightest stop there because it could still shake you and go. That doesn't mean just because the ATR is higher that you can just get away with the tightest stop in the world. You still have to respect the whippiness of a stock and how a stock moves. So give it a little bit of room. But the ATR is going to be on the long side here. Almost every time. Almost every time. Okay? One of the biggest differences for exceptions CVNA for me has been elevated. Yes, I agree with that. Elevated relative volume is important. Like the volume a stock is doing compared to what it normally does. So if it normally does 2 million shares and today it's doing 8 million shares, range will likely be exceeded, almost definitely. But again, this lecture is not the absolute range, it's the direction of the range that we're focused on, right? The direction of the range that we're focused on. Okay? Does that make sense? So, I hope, again, a simple and, like I said, a somewhat shorter lecture today. Very basic concept, but for me, I am not it has changed the way I trade. Okay? I think about it every single trade that I take. Not total ATR, but the direction of the likely next ATR. Say it's done 70%. There's 30% left in that stock. Is that 30% going to be above me or below me? I need to know. And if it's likely to be above me, I'm good. If I'm going long, obviously, right? Does that make sense? So I hope that you guys learned something about ATR that you haven't learned or thought. Maybe you knew it, but you never really thought about it in that way before. And I hope you'll factor this or consider this into your trading, and it will hopefully elevate your trading. For me, it was a true holy grail moment. I've had a few in my career, and this was one of them. All right, so I'm Jared Wesley of Live Traders. We'll get back at it again next week.